Welcome back to our last segment of our program. From the beginning, I've been saying that we've got among us in our panel guest one very special guest. So special that probably I could do the program with her alone, because these topics is totally dedicated to her, because she has been working in this field, had experience in this field. On these topics, she has got so many answers to give. To be honest, I met her yesterday for the very first time. I had a short meeting with her, and within that short meeting, I learned so many things. And I'm sure a lot of you might have a lot of questions like me that you want to ask her regarding our topics, company liquidation. So let's meet this special guest. So welcome to our program.
Thank you.
Cecilia Laird.
Yes, spelled correctly.
Okay, that's nice. Okay. As I mentioned that I have spoken to you yesterday.
Yes.
I learned a lot of things about yourself, about your profession and your experience. A lot of things I learned about your and also the topics itself.
Good.
So just I know. What about the viewers? They are interested to know about yourself. If you could briefly tell me about yourself, introduce yourself to our program.
Okay, hello, my name is Cecilia Laird and I'm an insolvency manager, and I currently work for Panosiliades Franklin & Co. And I've been doing insolvency since 2001, worked my way up from being an administrator right the way up to manager. I've done a lot of different things, both personally for my own LTD company that I have, and within different firms. I've worked for top 20 accountancy firms in the UK. And yeah, I've seen a lot and I've done a lot.
Yeah, I can guess that. Because what I could gather that, yes, you have got vast experience in this field. And you know about our program.
Yeah.
I don't know how much you know, but this program is mainly for accountancy, taxation, and business advice.
Yeah.
Okay. We have chosen these topics: company liquidation and personal bankruptcy. The next program will be on personal bankruptcy. The reason we have chosen, because it's not only talk about the business, day-to-day business. What happens if the business struggles and they have to close the company? So although we accountants don't carry out that work, the job of liquidation, but you have got experience in this one. What do you think about accountants could work together with liquidators?
Oh, definitely. I mean, we welcome accountants to come to our firm and present us with clients who have got businesses that are struggling. That's what we prefer, to be honest, because the accountant has an in-depth knowledge of what the company's about, because often when you speak to a director directly, they have very little clue about their business and the intricacies of how it's run. So working directly with an accountant who's got that knowledge is ultimate. It's really what we need. Yes.
Okay, that's good. Because some of our audience guests asked that question, that was the role of accountants, how they can play. So they can play a big role.
Oh yes,
when it comes to liquidation. So the client should come to accountants and then assess the situation first, and then probably appoint a liquidator like your firm.
Yes.
Right. There might be questions from our audience. If anybody want to ask any question, if you can, please. Yes, please.
Hello, Sriya.
Hello.
I've got a question. The question is, what is the process of liquidation?
Right. This is a process, of course. This is something that even we accountants don't know this, because this is a kind of a inside information what you do. You know, you don't have to even though you disclose it, it doesn't mean that we'll be acting as a liquidator. So if you could tell step by step, was the moment you meet the client and then the final stage.
Okay.
The step by step, if you could explain.
Okay, this is in the perfect world scenario. Okay, so in the perfect world, we meet the client stroke the accountant together, and at that particular first meeting, they've brought their ID, they've brought a utility bill, they've brought the employee information if they have employees, so that we can basically hit the ground running, and the accountant is certain that the company is insolvent. So when we go through all the different aspects and we do a fact find on that very first meeting, we've got all the information that we need to start the ball rolling. And then what we then need from you, basically as a director, we'd need something called a trading history. So we need you to just do a quick summary of all the things, all the events that have led up from commencement of the company incorporating right the way through to the situation that you're currently in. And that needs to be documented because your creditors need to know why the company is insolvent and how it got to this stage. Was it all your fault or was it just outside circumstances? So that's the first thing that we need, and that's at the first meeting. So client ID, we need information about the company, the books and records ideally.
Okay.
That would be great. And as I said, just work on a trading history. That's something that can be done over time and space, but that's something that we need. Okay, then what we do is we basically sign you up to make sure that this is what you want to do. There's a board meeting that's basically held with the shareholders, because it's the shareholders technically that closes the company, that agrees the company ought to be wound up. Okay.
Board meeting with
the shareholders, with the
shareholders.
Yeah,
okay,
with the members
okay.
of the company. Yes.
Okay. So you have a meeting with the board. Yeah.
It's an arbitrary. It's just on paper basically. It's just, but it's the shareholders that needs to agree.
Shareholders must get involved. Its directors cannot decide.
No, it has,
of course.
Yes,
because end of the day is shareholders who own this company.
Yes.
So they have got every right to know what's happening to this company.
Yeah.
Okay. So the next step.
Okay. So basically, the insolvency rules have changed, and we now don't. There's no such thing now as a Section 98 meeting.
What do you mean by Section 98?
Okay, so Section 98.
You know only.
I know. So the Section 98 meeting was the meeting that all the creditors attended, where you as the director basically were sat in the room and all your creditors were around you and they were screaming at you and angrily often.
Oh God.
Okay, that's been dispensed with technically.
This is a really good news, I believe. Those companies going into liquidation, because you might have experienced a lot. I remember more than 20 years back, I went to a creators meeting with my client, and he was shaking like anything. He was so scared that what will happen to him. They will ask questions. Even he was asking, will they take me from here to the court? Things like this. So they're so scared. So this is definitely not going to happen anymore.
No, there's not a definitely. There needs to be. There's a requisite now of it's under what's called the 10-10-10 rule.
Okay.
Okay. So basically, if there's prerequisite number of creditors say no, we want a physical meeting like in the old days, then one must be had. Basically.
Okay.
But really and truly, those are becoming extinct now, but based on on the requisite that's necessary.
Okay. Especially when the company doesn't have any asset, then probably creditors already give up hope that there's nothing to recover from here.
Yeah, pretty much.
That. Okay. So it's a good news. I would say this is something that only introduced this year. You say?
Yeah, 4th of April, I believe, this year, 2017.
April. So. Like me, a lot of people didn't know about this, that the creditors meeting is literally gone, unless they insist that.
Unless they insist, under the 10-10-10 rule it's called,
So definitely this is those who are listening to this program and thinking that, okay, I'm going into liquidation and all these creditors will come and will be asking, bombarding with me with questions. They will be I mean, not assaulting, they're insulting me, or in that manner will be shouting at me, screaming at me. No, nothing is going to happen. Very unlikely. Yes?
Yeah.
Okay, next step then.
Okay, so basically, it's now almost like a proposal that you put to the creditors, like a CVL, or Creditors Voluntary Liquidation proposal. So it's a pack that goes out to the creditors, and in this pack, There are various bits of information to do with the company. So obviously the trading history that I mentioned previously goes into that pack. There's a statement of affairs, which the directors obviously have agreed to. And the statement of affairs is just your assets and the liabilities of the company.
Okay.
There's also statutory information that goes into this pack that so it's got the correct name of the company. Just basic, obvious things like that, so that the creditor may make an informed decision, because that's basically what it's all about. Making a full disclosure. This is the situation that the company is currently in. Here's a list of all the creditors. Here's all the company's assets, if there are any, and this is why we're closing, and this is why the company ought to be wound up. And the creditor's basically given the opportunity to make a decision, because it's a decision-making process now, and that's how it's carried out. And there's a date that's on the letter that tells you when. There's a decision date that's preempted, sort of 3 weeks before the letter goes out, type thing.
So
and that's the date
so
that the
technically that
is wound up.
decision date is more or less like creditors meeting.
Technically, but it's the next day, because it's the decision date is everything all the time up to 23:59, which is a minute to midnight.
Oh God, minute to midnight.
Yeah.
Okay.
So you know right up to the midnight that the company is safe. Or
it's very unlikely 23:59 a creditor will turn up.
It would be very unlikely that they send an email or try and get hold of somebody in the office, because no one will be there.
Okay, then the next step.
Okay, so the next step, obviously, is after the decision date has passed and there aren't any objections, that's assuming there are no objections, then the company has then been placed into liquidation, into creditors' voluntary liquidation.
Okay.
And at that point, that's when we bring the directors in, they sign up all the paperwork just to agree that the company should be wound up, and has been, and that the liquidator is appointed. It depends on the resolutions, but that's basically, in a nutshell, what happens in the process.
Right. So, and also because yesterday when I was speaking to you, you mentioned about publishing in London Gazette.
Yeah, we once the company's been placed, not before any longer. What used to happen is obviously it was placed in the London Gazette as a priority. It was actually a prerequisite. It had to happen.
Okay.
Now that's been removed. So it has to be advertised that the company's been placed in liquidation, but not before.
Okay.
It's not necessary.
So what is the reason for advertising in London Gazette? Anybody could see that the company is going to liquidation. So now, because it's not published in London Gazette, so it's only the creators will know, to be honest.
Yeah, but then we are relying on information from the director that it has to be full and it has to be frank and it has to be honest.
Okay, but still, then again, only the creators, handful of creators will know that this company is gone into liquidation and company's house.
Once it's been placed in liquidation, do you mean?
Yeah.
No, it then goes into the London Gazette once it's been placed in liquidation.
So it will be published, but it's not mandatory now.
No.
Okay.
It must be published somewhere, but the London Gazette is obviously the default that we all use.
Okay.
But yeah.
So this is the process, yeah?
Yes.
That's very interesting then.
It's changed slightly since the rules have changed, yeah.
Okay. One interesting question I'm going to ask about the money, yeah?
Money?
Money, yeah?
Go on.
Talking about the money, right. In a company going into liquidation, the reason they're going into liquidation, they haven't got money to pay anybody, creditors, nobody. Even they cannot pay staff salary.
Yeah.
Okay. In a situation like this, you need to be paid.
Yes.
Who is going to pay you?
Okay, well, what normally happens is if the company doesn't have any assets and we can't take it as a realisation from those assets, we ask the director to dig deep and to pay our fee up front.
Okay.
If they can't, then
you don't do it.
Yeah, because it's, you know, we are providing a service.
Okay, but if they can't pay, whether you got any other source to get money for your fee, other than realising the assets?
Well, it would come from the director.
Okay.
Yeah,
but
or from a third party that we are aware of, like a shareholder or member person.
Okay. So it's somehow they have to pay.
Yeah.
So it comes with a cost. So you said that
it's
peace of mind is a
it?
peace of mind, but still you have to pay something for the peace of mind.
I mean, the directors has to make sure that you are paid properly.
Some way or other, yes. There are very few insolvency practitioners out there that would do it for free.
Okay.
You know, I always say there's 2 C's in my name and neither of them start with charity. So, yeah.
Right, it's, we accountants do the same thing.
You're not a charity either?
You're not
no?
a charity.
Oh, right,
either.
okay.
This program is a charity itself, but that's enough.
Okay.
Right. I would ask any audience guest want to ask any question.
Thank you very much, Madam Sylvia. So I have 2 questions. My first question is that I have a company. Company is when is I'm liquidation, and then after how long, after how many days or how many months my problem, if I'm problem, then problem can be solved, because an accountant is a professional. Can accountants on behalf of the company, can he solve this problem? And my second question is, after liquidation, how many days later I can start another company? This is my 2 questions.
Right.
Okay.
To be honest, Cecilia, probably we answered that questions
Yeah.
in the, that you can start your company even after your after you did the liquidation, or before the liquidation. It could be director of another company. That's not a problem. Okay.
Yeah.
So there is no any time scale has given that, okay, you cannot be director of another company for a certain period, okay, unless and until that director is disqualified.
Yeah.
Yeah.
Yeah. Basically, you can have 20 directorships all on the go.
Yes.
And make one of them, you know, place one of them into liquidation. So you can carry on being a director for all the other 19 companies that you have a directorship with. Okay, does that make sense? So it's not a matter of, I've now gone into liquidation with one of my companies, so therefore I can't be a director. You can only not be a director if you don't qualify to be a director. So that must mean that you're bankrupt, for example, or you've been disqualified to be a director. That's the only the 2 reasons that I can think of quite.
Prevent you.
That will prevent you, yeah, from continuing as a director.
Right. I'll take another question, please.
Thank you very much. And my final question is probably this afternoon. If a company goes liquidation, but the staff salary hasn't been paid, so does the staff can claim their salary during that time?
Oh,
It's very interesting, to be honest.
Yeah.
We covered a little bit.
I heard that you covered a little bit.
Bengal,
Yeah.
but we want a bit in detail, because once the company gone into liquidation, you know that company employees are not being paid, because in the report creditors list will be there.
Yeah.
So how they could be paid?
Right. Well, if what a director has got a duty to his employees and obviously to the creditors, because the employees are creditors. And, you know, especially if they're, you know, regardless of what wage they're on, they're not going to get paid that month, I'm assuming, because obviously if a company's winding up, then you're not going to have the money to pay the salaries. So what we always say is, from that first meeting, when you actually come to an insolvency practitioner and you're serious about winding the company up, make sure that you've brought all the employee information that you humanly possibly have got. That means the dates of birth, NI numbers, everything. The dates that they started, everything, all the holiday entitlement, because we need all that information at the very beginning, so that we can fill out our fact sheet, send it off to the redundancy payments office, so they can get, the person can get they're probably entitled to redundancy pay, and they can get paid. And that's really important, and a lot of directors kind of forget that, and they sort of think, oh well, I'll get that information soon, but it's not fair, because the people, they're out of work now, you know, and they need that money. So yeah.
It is very important question. Even to be honest, I've been dealing with so many liquidations over the years. Means I got involved for the clients who gone into liquidation, and not many I came across that they claimed staff salaries. Okay, this is also important, that not only salaries, even unclaimed holiday pay.
Yes.
And redundancy pay, because all on a sudden they are redundant. They don't have a job, and they don't. If they go into benefit event, they still are entitled for this redundancy pay. But who is paying this?
This is the government payment. That comes
how? Who?
Well, once the information goes off to the government, what the government then does, the redundancy payments office, they step into the shoes of the creditor, of the employee, sorry, and they basically take the hit. So they pay the employee. It's only a small amount, but it might be £800. But it's
£800, a lot of money for some
it is a lot of
people
money. It
who
can be
are,
up to that. It's not necessarily that. It
redundant and
depends
probably
on.
working in basic salary. Yeah.
Yeah, it could. It's whatever. It's to do with how much you are paid per week. It's all calculated. Some parts of the claim are preferential, which means they get paid in preference to other parts. But it can be anything from 800. It can be more. But obviously, everybody's situation is different. But they often are entitled to something, which is better than the no wage that they're actually going to currently receive.
I should say it in Bengali, to be honest, this part, because আমাদের অনেকেই জানে না যে একটা কোম্পানি লিকুইডেশন গেলে সেই এমপ্লয়ি যাদের বেতন দেওয়া হয় নাই, যে অফিশিয়ালি বেতন দেওয়া হয় নাই, তাদের হলিডে পে, তাদের যে আনপেইড স্যালারি প্লাস যে রিডান্ডেন্সি পেমেন্ট, এগুলো কিন্তু ক্লেম করতে পারে। এবং রেস্টুরেন্টে একটা রেস্টুরেন্টে 7-8 জন স্টাফ থাকে, একটা ফ্যাক্টরিতে 20-30-40 জন স্টাফ থাকে, এদের অনেক পয়সা এরা কিন্তু পাচ্ছে। সুতরাং এটা আমি মনে করি ডাইরেক্টর হিসেবে আপনার দায়িত্ব সব ইনফরমেশন লিকুইডেটরকে দেওয়া, যাতে এই পয়সাগুলো ক্লেম করতে পারে। I only mentioned that that director's responsibility.
Yeah.
Even ethically, he should provide this information, because these poor people, they should get this money.
Yeah.
Okay.
If they're entitled, then definitely yes.
If I get one more just relative questions, that as you said that it goes to the government department and redundancy department paid it back to the staff.
Yeah.
But during this process, how the staff going to be assured that their payment's gone through and it's going to come through within a certain time?
Well, most IP firms, insolvency practitioner firms, have got a dedicated person who will basically is the point of contact, and you just speak to that person and they will tell you whether they've definitely sent the form off or not, and then you immediately will get a response back from the redundancy payments office. They're very, very quick. They do this every day. It's what they do.
Okay. Coming back to that money issue, yeah?
Yeah, you're obsessed with money. What's going on?
We're talking about money
Go
here. You know that extra work you'll be doing now
Yes.
to claim this? Will you be charging extra?
No, it's all part of the fee. There's no separate fee for this. It's all part of the service that we provide. I said we are a service providing industry. That's what we do.
That's good. That's not a charity anyhow now.
So I think we
Thanks
could
very
say
much.
that this is a part of the liquidation. When a company goes into the liquidation, you look for that portion very carefully, right?
Oh yeah, yes, we have to. And just delaying that information is enough to put everybody back 2 weeks, 3 weeks.
Okay.
It's important. It's something that is often overlooked, and it shouldn't be. It should be emphasised.
Okay. Going back to another question that probably previously asked, you can give me an answer in very short because we haven't got much time left.
Okay.
If you can identify a company's Phoenix company,
Yes.
what could happen?
Right, well, because basically we have 3 months in order to do an investigation on the company. So we go through the books and records, and as long as we don't find anything untoward, it can go through sweep. However, if we do find that there is a bit of phoenixing basically going on, or even reusing the company name, that's also the criminal offences, and they must be reported. So it's the insolvency service, especially the target team, that will contact the individual, and it becomes a personal
So who
prosecution.
is to investigate that one? You?
We do the initial investigation.
Okay.
We being
And
the
then you
insolvency
report.
practitioners firm, we do the investigations on the books and records, etc. But then the information then goes off, and it's up to the insolvency service to then decide whether they wish to prosecute or not.
Right. Another question. One thing we get confused with liquidator and official receiver.
Okay.
Because I'm sure that a lot of people are confused about these two individuals.
Yeah.
Okay. Are the same or different? The roles wise, what's the difference?
The only difference really is that the official receiver works for the insolvency service, and therefore he's a government appointed official, he's a receiver, he's a manager. So on the moment that, say for example in a compulsory liquidation, which means it's gone to court and the company's been wound up, the official receiver is immediately the liquidator of that company. Whereas with the CVL, creditors voluntary liquidation, it's normally an insolvency practitioner who is the liquidator.
Okay. we are.
But they do the same role.
Okay.
They do
We've
exactly the
got
same
only
role.
4 or 5 minutes left.
Okay.
We've got a video to show
Okay.
because we always show a video. So I'm going to show the video to our viewers, and after that I'll come back for the final question. Yeah?
Okay.
So let's watch the video, please.
So you want to liquidate your company. The primary purpose of a limited company is to liquidate it. Let's be honest, limited liability is why you form the company in the first place, to avoid personal liability for the debts of the business in the event it went bust. In the event of insolvency, to limit your liability, you need to liquidate the company. When a limited company is placed into liquidation, the shareholders and the directors are not personally liable for the debts of the company, unless personally guaranteed, or in some cases where the director has acted blatantly fraudulently. Once the company is in liquidation, creditors cannot take legal action against either you or the company, except for any PGs. The official receivers takes legal control of the company from the directors and deals with the winding up, at which point the directors are free to pursue new opportunities. The directors are able to buy the assets of the company from the liquidator, should they wish to do so, and use the assets to trade a new business. The official receiver will undertake a review of the director's conduct and report any evidence of unfit conduct to the disqualification units of the Government Insolvency Service. This may lead to a ban from acting as a director in the future. For smaller companies, the chances of action being taken against the directors are limited. In the current climate, where many well-managed companies are in financial difficulty due to the economic conditions, the prospect of a ban is low, especially in smaller cases with less than, say, £100,000 in liabilities. A CVA, or Company Voluntary Agreement, is where instead of liquidating, you make a proposal to pay off the debt over a period of time. This can sound like a great deal when your back's against the wall, but the reality is that it's tough trading a company that is in CVA. Most companies that try a CVA end up back at square one, in liquidations, and the directors usually wish they had gone down the liquidation route from the start.
Probably you have watched the video. It's kind of summary of our today's program. One thing is mentioned in the video is that director can buy the assets of the company after liquidation,
Yes.
after it declared that it's insolvent. Is it possible? I mean, this is something that a lot of people they don't know, that the company had an asset and the company gone into liquidation means all the assets will be seized and will be taken away from them. Is it possible that director could buy the asset?
Yeah, it's very much so. I mean, once we find out exactly what the assets are, so we correspond with the accountants and we find out exactly what we're dealing with, often the director will say, well, is it possible for me to purchase these assets? And we don't really mind, is the word I prefer, mind, where the money comes from, as long as obviously it's the director and it's been valued and it's at fair value, fair market price.
Thank you. This is the final question to you.
Okay.
You know, the company is struggling.
Yes.
A lot of companies struggling in this economic climate. For companies like this who are struggling, what advice do you have to give to them?
Okay.
If you could put it in a nutshell.
Yeah. Basically, my advice is don't wait. If you can see that, you know, you're not just going through a bad period, it's actually there's loss after loss, you're borrowing money from Bob, Peter, Paul, whoever, and you know, you're trying to keep this company afloat, and it's very obvious to other people that really something needs to be done. At that point, look for the triggers. One of the triggers I've heard you discussing earlier was HMRC. If you've got an HMRC inspection and you know that, and you've appealed it and they're still adamant that you owe this money and you don't think you do, at that point, seek a professional, come to a professional, come to an accountant, come to an insolvency practitioner, but do something. Don't just keep on working, trading, because to trade insolvently is a criminal offence. And it, you know, really, you need to really think about what you're doing when you're trading insolvently.
Thank you, Cecilia. Thank you
That's
so
okay.
much.
That's okay.
We learned from you a lot, our viewers, our audience, and thank you for coming to our program. Hope to see you in next program. The reason why I'm going to say goodbye now, because we initially planned these topics to cover in one program, but it's so vast. Then we have to do our second program, which is next month. So, আপনারা যে যেখানে থাকেন সুস্থ থাকেন ভালো থাকেন পরবর্তী প্রোগ্রামে আপনাদেরকে আমন্ত্রণ জানিয়ে এখানেই বিদায় নিচ্ছি খোদা হাফেজ